girls, Nathan here. Here we go, we're going live. Hey guys and girls, Nathan here. Just wanted to tune in to Facebook. It has been a while and thought I would hop on. It is Tuesday, 7 o'clock, and thought I'd come back for a Tuesday night. Just thought, as you guys are rocking on in, got lots of things to catch up on. It's been about 12 weeks or so since we've caught up, and lots and lots of topics to discuss. And the world is changing on a daily basis for good, bad, or indifferent. And lots of opportunity, lots of cool things happening. Never been happier in life myself. I'm just going to get some water as everyone's hopping online. Don't seem to have too many people online, but that's all right. We'll get straight into it. Thanks a lot for tuning in and having your Tuesday night chats. What's happening in your end of the world? If you want to send me a little text, just so I know that you're watching and listening and can see it, and we'll get straight on with it, because there's lots of interesting and exciting things happening. So sick mullet, I got the mullet's getting a bit long. I couldn't get to a hairdresser, and I shaved my head myself the other day. It was actually a pretty decent haircut, but everyone is not a fan of the mullet, and I like it. I'm trying to grow it nicely, but obviously a hairdresser can do a good job. But if anyone's worrying about what that patch there is, it's just a patch of grey coming right through. So you can see everyone here's hopped online. So hope you're doing well wherever you're watching this from, and your world is doing all right. Apparently it's being shadow banned. Who knows? But we're going to improvise with we're going to talk about Evergrenade today. I'm going to call it Evergrenade. I've got a few new little terms for us to use. This thing will now be known as the procedure that people have been having done, and lots and lots of things happening in the world. So getting straight into it. Since we caught up last, we've had many changes out there in the world. Firstly, notably, I just got sick and tired of really talking about the everyone being in prison in the home. It just became an annoying conversation to be talking about. I noticed the elephant in the room is that everyone's now having a procedure done, i.e. that procedure that they're having done, the medical procedure. What will happen with the world shortly. I did a webinar talking about it about a month ago, or maybe 3 weeks ago, talking about how I see the financial markets turning into this new digital world that we live in, and our currency going to a digital so with the my first topic that I want to talk about is Evergrenade. Whatever you call it. I'll call it Evergrenade, because Evergrande, I call it Evergrenade. The reason being is that we have a debt bomb that I've been talking about for a very long time. I talked about zombie companies beforehand. Zombie companies being all the defunct businesses that are out there in the world, which are constantly bleeding money, and they are insolvent, but they're still on the stock market. I made comments last year to everybody that we would see a stock market crash. I made comments that we would see our super funds get caught up in that stock market crash, and we are seeing that roll out now. Where will the Evergrenade go and detonate to? That's the exciting part. So for those of you that aren't aware what Evergrande is, or Evergrenade, it is the largest building company in China. So I believe they've got 800 projects coming out of the ground at the moment. So let's put that into context. So if you look at the big companies here in Australia like Stockland, Lendlease, Westfield, those large companies, those building companies that are out there producing properties in China, they've got no market, they've got so much debt. It's a fiat debt-based Ponzi scheme. It is $1.3 billion, or $1.3 trillion worth of bonds and debts that could be stuck into this project. There's definitely $300 billion worth of funds that need to be allocated for, and they can't afford to pay their bills and their interest rates. Imagine going into a collapse right now, right? Imagine sitting there saying, we're the largest company, we're in the top 500 companies in the world. Janine just wrote 1,300 projects nationwide, I heard. Imagine being the largest company in the world right now and not being able to pay your debt, right? What would be so ironic by that? Your interest rate is almost 0%. What is their bond? What is their debt interest rate at? I'd love to know that. I haven't been through all the stats and figures, but if you are paying interest at 1% or 2% and can't pay your debt, we've got a company that one of the top 500 companies in the world has blown up, going insolvent, and the interest bill is next to nothing. Imagine if the interest rates, and I talked about this for the last 5 years, right? Imagine if interest rates just went up by 1%. Everyone would go bankrupt, right? That is the world we're in. This is just the tip of the iceberg. Imagine when other companies start defaulting, right? Loans that are not being repaid, funds that aren't getting allocated. Imagine all the trades, all the resources, all the infrastructure going into each one of those 1,300 projects. What will happen to those businesses when they don't receive their funds? That is the most scariest part, because they say that this could be the China's version of Lehman Brothers. This could be a hell of a lot bigger than the Lehman Brothers moment. For those of you that aren't aware what Lehman Brothers was, it was a bank back in 2008 when the GFC came through. It collapsed, and there was Bear Stearns, Lehman Brothers, there was many other companies, and then all the derivative bubbles blew apart. The derivatives market at the time around the US housing market was around $7.5 to $8 trillion worth of derivatives that blew up. Since then, there's over $1.4 trillion worth of derivatives, and they're derivatives based on all different markets. So you've got student loan debt, you've got afterpay, you've got car loans. Going back in 2008, you'd see cars that are 30 years on the road. Old Corolla, old Datsun, old whatever sort of car that you could talk about, Daihatsu. People would laugh. You'd put bog on your door, you'd spray paint it, you'd drive around with one door that's painted with primer. Who remembers those old days? I look out the window now when I'm in my office and I see cars drive down the freeway, drive down the road where my office is, and I'm like, these aren't cars that I'm seeing down the road. I'm seeing financial instruments that are using the vehicle as the security for them to sell debt. And that's the world that we're in. We're in a debt-based fiat Ponzi scheme, and we're starting to see this unravel, right? But the difference is that this time bomb that we're seeing is about 100 times bigger than the GFC, right? And I've talked about the global financial depression, the GFD. I believe we're in a depression. We're still in a depression. I'm the most optimistic motherfucker out there that you'll find. The reason being is because the bet that's on the table is against the amount of debt that's being created. We're seeing very, very clearly, this is the first of many to fall apart right now, the first of many corporations to collapse. We've got one of the top 500 companies in the world that's gone under because they can't pay their interest bill at 1% or 2% or 0.5% or 0.25%. What's going to happen after this, right? There's one of two options that's going to happen. One, they default on the debt, and that'll set off a cascade of different problems. So if they default on the debt, then other super funds, other nations, other countries, other companies will start going bankrupt because they've just lost $1 billion of their capital, $2 billion of their capital. It will impact every single market around the world if they don't bail this thing out. If they bail this thing out, well, then there's $300 billion of money just overnight that gets printed and gets thrown out there in the marketplace that has just been re-injected into the market. So they're going to have to bail this out. If they let it fail, game over, right? But they're not, because they've shown their hand. The central banks around the world, the controlling entities have shown their hand that they can't let this thing collapse. So they're going to have to print their way through it. They're going to have to print out more debt. They're going to have to print out more bonds. They're going to create higher inflation, and that's going to put pressure on driving down interest rate around the world, which is going to keep us at we're at a zero interest rate policy at the moment, but it's going to possibly drag us in a negative interest rate. And these are things we're going to continuously see. People might see it, get fearful. People might see it and get scared. But that's the opportunity, because you know that it's going to get bailed out. Now, looking at it from another perspective, right? We've seen Evergrande out there, in trouble. They're defaulting, and instantly we've seen Bitcoin fall by, 20% or whatever it's come down by, 15%. We've seen every stock market around the world tumble straight away. And I bet you tomorrow when we wake up, we're going to see it implode even further, right? And this is massive. This is one of the biggest things, right? We saw a pandemic get created, over in China, allegedly, even though there's probably other places that have put the time bomb to blow it up in China to give people medical procedures to, for whatever agenda that may be. But I'm not going to talk about medical procedures. We're going to just simply talk about, the pandemic, financial pandemic that's coming through. So looking at some of the news articles that are out here, I'm just going to read the first one, give you a bit of an understanding of the size of this collapse. So the collapse of the indebted developer, it sounds more better because it's an explosion of debt. Chinese real estate juggernaut is facing ruin, sparking fears the embattled company could become China's Lehman and cause global disaster. It already has, right? So imagine the impact, right? We're in a world where every single currency, every single financial market is very interwoven. If crypto falls, right? And this is something I laughed about so much, right? I actually said last time that we were speaking on Facebook Live, I was saying that we would see JobKeeper come back. And 12 weeks ago, everyone got into house arrest again. We've got over half the country in house arrest, being forced to have procedures done to themselves against their will, whatever the case may be. And, suddenly we've got JobKeeper. It's now called JobSaver, right? But in March this year, we saw them remove JobKeeper. They stopped printing money. We saw currency around the world stop being printed. As soon as that occurred, we saw crypto markets drop. I remember watching my crypto account. It lost nearly 7 figures overnight. And all I did was laugh, right? I laughed because I was like, first and foremost, if I didn't laugh, I'd be upset. And I just laughed because what I realized is that everybody has got their money stuck into crypto, and these markets are now so dependent on everyday families. If crypto was to crash, that means the people that were pulling their mortgage out, putting the crypto market to boost it up, the people that were sitting there ready to buy a car, and now they have to cancel their car order, now they have to cancel their home that they were buying. The market is getting so big, it is so reliant on, it can't collapse. They can't let it collapse. So looking at this time bomb exploding, we've got massive repercussions that will come from it if they let it explode. And, they can't, right? So it's going to be fun. It's going to be fun. If we see them print out another $1 trillion, that $1 trillion will be just washed away. It'll go to investors, it'll go to hedge funds, it'll go to banks, it'll go to builders, it'll go to tradies, it'll go to, keeping the system afloat. But it's sticky taped together. It's just the world we're living in. It's amazing. It's amazing. A lot of people are going to be watching this going, oh no, the stock market's collapsing. Oh no, the crypto market's collapsing. People will be sitting there going, oh, Bitcoin's crashing because, XYZ happened. But it's got nothing to do with anything. It's just a manipulation of currency out there, and they have printed so much debt that they have to keep printing more and more debt to keep this system afloat. It is complete fraud. It is a complete Ponzi scheme as a society and all our currency that we're using, which is great. For me personally, I actually have zero care for money, right? And a lot of people have been sitting there on the sidelines going, I'm saving some money, I'm going to get this, I'm going to do that. The world that we're living in, I never hear people, right? This is just off topic. I never have people come to me on a day-to-day basis and say, Birchie, I'm so glad I bought a property in 2003 for 300,000 and I sold it in 2005 for 400,000. I made $100,000 back in 2005 and it was the greatest deal I'd ever done. People don't do that. Why? Right? People are upset because they sell a property. People wish they had bought more property. People wish they had done more things. The reason being is that it's not about the currency, it's about the asset. Most people are focusing too much on the currency or the dollar. They go, oh, my house has gone up from $500,000 to $1 million. I'm so rich right now. Well, you sell your property, you take that $500,000 and you go do something with it. It's not going to buy you much. It's not going to give you many options. And the reason being is that it's the currency that's lost its value. It's not the property that's gone up in value. So if you're selling off an asset or whatnot, you're just saying that you value a dying currency more than what you do a physical asset. So for times like this, I think it's hilarious because my debt is becoming more worthless. Everybody should have assets. It doesn't matter if it's an old, bashed up Nissan Skyline, doesn't matter if it's an old lawnmower, doesn't matter, whatever physical asset. It could be an old dumbbell for your weights, right? Go and look at how much it would cost you for a weight set or a gym set or whatever it is. Everything is going up massively in value. For you to build the gym set, for you to be able to build the weights will cost a lot more in material, labour, delivery. How many times have you seen Australian Post put up their prices this year? Why, right? For you to replace something, it's going to cost you a hell of a lot more than what you're paying today. And this is the amazing part about seeing things like this collapse, because it, A, could make it very cheap, and if the whole economy collapsed, it'd be great as well, because you could go and pick up more assets cheap for your cash that you've got. But it's not going to happen. They have to print their way through this, and it's very, very exciting. Goes on to read, China Evergrande Group went from global titan to the world's most indebted real estate developer, racking up a staggering $432 billion in debt. This is just inside of the company as far as debt is concerned. It's not talking about, let's say that they have these properties and the projects that they're working on for $432 billion worth of debt. What about all the investors that have invested their cash and the debt that they've taken out into being able to make that happen? What about all of the suppliers, the trades, the families, the people that are working for the corporation? Where are they sitting at this? It's far greater than what it looks like just on the surface. What about all the super funds that have invested into it? What about all the longs and the shorts that are going to be, blowing up on the stock market? This is very, very, very serious, and I think it's amazing, to be honest, myself, just be witnessing this happen, because this is another level of the depression that we're going through. People feel like they're fine now. They feel like their financials are okay. They may feel like they're poor. If you're feeling poor already, how bad is it going to be when you start seeing your crypto price fall? How bad is it going to see when you see your super fund fall? The only way to get around this is just by printing more and more worthless currency. Just going on to check out my next article about it. Got the articles, load. For some reason, I can't get this next. Oh, here we go. Just waiting for it to load up. Here's an article that I've got here from Wolf Street. What a collapse of China's Evergrande would mean. China hasn't bailed out its over-indebted property developers yet to shock the foreign investors who bought their dollar bonds. Could the forced deleveraging trigger a financial crisis? The property group has been a huge factor in China's economic growth. It accounts for 28% of GDP. So let's just think about that. The whole nation's growth, right? We've got the largest developing nation in the world that accounts for 28% of their GDP. This one company accounts for 28% GDP. That's going to be left there to blow up, right? It's not going to be blown up. It has to be bailed out. And much of it has been funded by debt, including dollar debt. and much of it is now blowing up. Foreign investors poured into the property sector over the years, buying hundreds of billions of dollars of bonds, including dollar bonds issued by China property developers. Now, when people come to me, I've had people ask many times over the years that, should I buy into a commercial property trust? Should I buy into a real estate trust? Should I buy into one of these funds? The reality of it is when you're investing into these funds, you don't know what you're investing into. When I'm investing into real estate, I know that I could rock up to the property, knock on the door with my mullet and say, hey, give me my rent. I know the property that I've got. I know the asset that I own. I can go see it, touch it, feel it, and all those sort of things. I can go get a loan on it. I can sell it if I want. I have full control of that. These guys here, if you're investing your money into their fund, right, you have no control over what is happening out there. But it just goes to show, like when I ask you guys about your super fund, where are your funds really invested? Do you own those funds in your super fund? Like which company, say you've got 100 grand in your super, where is it invested into? Is it invested into cash? Is it invested into bonds? Is it invested into shares? If it's invested in the shares, where are those shares? Which company are those shares invested into? It's your money. It's 100,000, 200,000, 500,000, whatever's in your super fund. You should be knowing all these questions, because if you don't know these questions, you don't know what's happening with your money. Let me tell you, there's going to be a lot of this that's trapped inside of these bonds. Those that thought the bonds because they like those yields, in some cases over 10%, right? I remember that there was a company doing this in the crypto markets called BitConnect, right? It was a Ponzi scheme. This here is a Ponzi scheme. Now, I've posted a few videos. Go check them out over on Birchfeed, birchfeed.com. Go and check those videos out about this. I've talked about it for a few days. There's one with Lynette Zhang. There was a news article. I think the lady was from India that was doing the article. I posted it this afternoon. Go check out all those articles I posted over the last 3 or 4 days. I posted them when this news first came out over there. But big Ponzi scheme. Thinking that the Chinese government wouldn't let these companies default, that it would bail out the bondholders as it bailed out so many of bondholders before. And surely it will do it again, given how critical the funding of the property sector is to the Chinese economy. And now just about everything has gone wrong for these foreign investors. For months, there's been massive crackdown by Chinese authorities on liquidity-driven inflows into the housing sector. Authorities cracked down on the over-leveraged property developers. They target the mortgage approvals, interest rates for first-time buyers, and tampered down all the rental growth. These push banks to reduce their lending for home buyers. The national property tax has been put on the table, and this is topped off with an increasingly strained relationship between the Chinese government, the United States government, that has major steps by the US government to crack down on speculation by Chinese entities in US stock markets. China's crackdown on the property speculation is guided by the official mantra that housing is for living and not for speculation. If we're talking about that, the central banks would not be over-leveraging people in order to be able to buy the properties. The only reason why our properties are going up is not because Nathan's the best investor in the world, not because you're the best investor in the world. It is simply due to the fact that they are printing very cheap, easily accessible debt with ability to get in there with very little money. The foreign investors are suddenly realizing that they're no longer scared and that the government may not bail them out. Bailouts have been taken for granted given how important it is for the property sector to the Chinese economy. Foreign investors whose money was needed to fuel that property speculation had felt secure in their thinking that China would bail out those bonds if push came to shove. Now push is coming to shove. The Evergrande Group, the second largest property developer in China and the property developer with the most debt in the world, owes banks, shadow banks, and other companies, investors, its suppliers, contractors, and home buyers $305 billion in US dollars, according to Bloomberg. So, come to think about it, right? If you look at how this property fund sits in the marketplace, it won't directly impact an Australian house. It won't directly impact an American house or any other house around the world. What it will do is completely annihilate all the banking system, because there'll be big holes in these companies and the businesses that have had affiliation to this, lending money, and their assets will be wiped off the balance sheet. So literally there's companies in the stock market which will be taking losses of $1 billion here, $1 billion there, $2 billion here, $5 billion there. And will they be bailed out? I'm confident that we'll see a bailout, but it doesn't mean that the company will die. It'll mean that a lot of investors may lose their money and whatnot. On August 31, it said work was suspended on a number of real estate projects after it delayed payments to its suppliers and contractors. It warned that it may default its debts if it can't raise new money. If it was difficult to raise new money before, it became impossible after the announcement, unless the government steps in, and that hasn't happened yet. On the 7th of September, Moody's and Fitch downgraded Evergrande and a number of its entities deep jump to ratings that indicate that the default is imminent, with little recovery for investors of those bonds. Moody's said that the downgrade reflects the company's heightened liquidity and default risks, given that the large amount of debt will mature over the next 6 to 12 months. So think about this, right? Let's say that Evergrande has built 1,300 projects. Let's say that, see your comments, guys. Keep the questions coming. Let's say that this whole business blows up, right? It won't. It'll be chopped up. The properties will be sold. No matter what, each one of those buildings, each one of those properties will still be in existence. It's real. The only thing that wasn't real was the debt and the ability to repay that debt. So the properties are still there. They've been built. Someone's going to own them. Someone's going to take possession of them in some way, shape, or form. But right, the investors that put their money into that will not get their money back. And what you want to be digging into is who's been affected, who's going to be coming out with the fingers missing after this, and who's going to have them blown off. That is the most interesting question. And those companies could then have further downgrades. So this is going to have a ripple effect. If you have a bank in the US that's lent $2 billion worth of funds to Evergrande, they've lost their money. That company will need a bailout as well. So the US government will have to bail that out, but then there'll be a ripple effect around that company, around that industry, around that position, and then there'll need to be new stimulus checks around that. So of the tens of trillions of dollars, maybe even hundreds of trillions of dollars worth of currency creation that's occurred in the last 12 to 24 months, we're going to see a hell of a lot more of that, whether it be today, whether it be next week, next month, or over the next year. That's going to just amplify the amount of currency creation that's happening around the world, which is amazing, right? For anyone that's got savings, that will be wiped out, right? If you have cash in the bank, it's really, really bad. If you have debt and if you have physical assets, those assets will be inflated away. The debt will be devalued, and that's where the opportunity lays for just everyday mums and dads. Next article that I have got, I had them all sent to me. I've got them here on a little list. This one's a fun one. Just opening it up. The UK government holds energy emergency meeting over gas prices. So maybe if you guys want to send a little note of some of the things that you've seen going up in value recently. And the one thing I haven't seen going up in value is the dollar, right? And this is the fun thing. Just think about if you earn $1,000 this week. Let's say that your income's $1,000. It could be $2,000. Whatever you're earning as an income. Let's say you've got $1,000 coming in this week as a paycheck. You get that $1,000. You're never going to be able to buy the same amount of shit that you can today ever again with that same $1,000. And the reason being is that the cost of everything's rising. Here we've got emergency crisis meetings over the price of gas. The UK government held an emergency meeting with energy and consumer groups on Monday as the country experiences record gas prices that threaten households with huge bills and suppliers' futures. Prime Minister Dumb and Dumber guy, Boris Johnson, sought to reassure over the prospect of consumers being hit with surging power bills coming winter. So just here we're seeing, right, we've got gas prices rising. Now we're seeing power prices rising. We're seeing the energy bill to housing explode. We're seeing the cost of shops and retail outlets to keep their lights on going to be going up in value. That's going to be passed on via the cost of whatever you're buying from the shops. I went to Woolworths yesterday and I bought tacos. I made tacos, and in that taco I got some meat and stuff like that. I just went to the shops. I don't normally go to the shops, but I went to the shops and I was looking around at all the shit in the shops. And do you remember you used to see like a $2 shop, right? You go down and you get lots of value at the $2 junk shop. When I went down to, I think it was Woolworths actually I went to, and when I went in there, it was like I couldn't find much for less than $5 in the shop. No matter what it is, there's just, everything's just rising and rising in value. Here we have crisis meetings coming in. Imagine when they start printing off more money, right? We're going to have JobKeeper extended again. We're going to send everyone into imprisonment again. We're going to send everyone off to another medical procedure again. And then suddenly, all this money is going to get sloshed around in the system and people can't afford shit. And that is the world we're heading into right now. We're seeing a depression based on inflation and not on deflation. If we had a depression based on deflation, the whole economy would implode. But instead it's exploding and people just simply can't afford to live because they've got rising energy costs, they've got rising costs of food, rising costs of everything, just to keep the power on. I've got a little heater. It's a bit cold here at the moment. I've got a little heater under the table here and it's keeping my feet warm. Next topic, which is quite an interesting one. I'm not into protests, right? We've seen a lot of people out there fighting recently. We've seen the world go really whacked up. And I'm not encouraging a protest. I've never been to a protest, wouldn't even think about going to one. I find them, interesting. And, if there's good people out there, I encourage, people to go for their rights. As I said, the country's in a police state, right? If you want to go down the shops, right, here we are living in a world where, it's just a virus for your own protection, right? But you're being forced into your own house. You can't be allowed out. You have someone over, you're going to go to jail. You walk out your front yard, you're going to go to jail. You're going to be tracked, traced, chipped, and you're only allowed out potentially if you get a medical procedure done, and people are not liking it. And I get concerned because I see so many people on Facebook, with really, really random, comments about, they're an expert in the field or whatever the case may be now. They're a person who understands science and medicine and all those sorts of things, making commentary. There's two sides of it. But here we are in a world now where there's fights. One of them that I saw today was very interesting. They didn't post the video on the Birch feed, but I was thinking of it and I was like, it's probably not the topic for today. Let's just leave it out of there. But apparently there was thousands, tens of thousands of tradies that are out of jobs, out of work, refusing to have a medical procedure taken, and fighting back thugs, right? Literally, I saw that there was a union, these union thugs that rocked up and they've got tattoos and all that sort of stuff. And they're throwing bricks and hurling shit into this place because their rights weren't taken care of. And it's just very concerning to see where things are, but at the same time exciting, right? And I think, I feel sorry for a lot of people that are being forced into a medical procedure. I think that it's important. I'm not affected too much by it because I'm not going to partake into that. However, there's a lot of people that, against their will, are being forced into it simply due to the fact that they have to do it for their job, which is concerning to me as a person, and obviously to them that they're the person that's been coerced into it. I think it's important to try and work around, being bullied into that sort of stuff. Looking at my other article, which is what I think it's really about, which is what I talked about early 2020, which is this article here, which is the first look. Aussies start to receive the first set of papers, digital papers for themselves. They're getting their own wallet, they're getting their own sort of things. Hundreds of Australians can now access their digital certificates. Government Services Minister said on Wednesday, announced those who have received both of their procedures are able to access the recently launched certificate through their Medicare account. The certificate has a coat of arms hologram that includes a person's name, date of birth, and a green tick of validity. I think I'm just going to leave it there, right? If you haven't seen the webinar, I did a webinar on this. It was actually 6 weeks ago. Speak to my team, admin at B.Invested.com.au. The thing is that we're being forced into a digital currency. We're going to see a reset of our currency. Currency is going to die. I'm very, very confident of that. I went on for about 3 hours talking about how this will all fit into the digital identities that we have, the digital world that we're going into, the digital ID, and ultimately these next rounds of stimulus packages will probably only come out to people that have had a certain medical procedure done. So, yeah, very, very concerning that we're heading into a world which is being forced into totalitarian, communist, fascist sort of society. Steve just wrote here, there's a group called Know Your Rights Group, have some great resources. I have a couple of times logged onto that group. I've seen a couple of their videos. I don't know too much about them, but I did see that they had some great resources. Feel free if people have some good resources to share them in the comment section here of some either groups or some links. If you have my personal details, whether it's my phone number or my social media handles, send just reading your comments come through, send me the links that you've got, and if they're good, I share them into the Birch feed as well. But it's very, very concerning. If we look at this news that's coming out, I was talking to someone yesterday from Singapore, and they said that in Singapore that they were allowed to have their freedoms back once they got to 80% of procedures done, medical procedures done, that they're allowed to go back to their normal life. It's allowed to have 5 people, but they all had to have the procedures, very similar. If you think about it, I was like, the question that initially went in my head was, why are the rules the same in Singapore as they are in Australia? And then you go over to the US, and how come the same rules apply in the US as they do in Australia? And it's like, I'm just questioning myself as to who actually put these rules together, and how are they playing out, and how do they really affect us, and why do we have to abide by them? That's probably my more bigger questions. Here's my last one regarding inflation. Now, this is a very, very funny article, and it's another one from CNBC, and it says UK inflation rate posts biggest records increase since records began. So thanks for sharing that, Steve. The article goes on to say, Reuters, or whatever you call it, poll has predicted a reading of 2.9% inflation for August. The index jumped 2% in July on an annual basis. The UK Consumer Price Index surged by 3.2% in the 12 months to August. Official data showed on Wednesday the largest ever month-on-month increase since records began in January 1997. A poll has predicted the reading of 2.9% for August alone. The index jumped by 2% in July on an annual basis. The Office of National Statistics, which published the data, noted the surge was likely to be a temporary change, and said the UK government is Eat Out to Help Out program last year may have accumulated the jump. Does that not sound like the dine and wine vouchers at the beginning? Like they're giving out the same things. Why is this same occurring globally? People think that their properties are going up. They think their properties are great. They think that things are good. But we're living in a complete fraudulent financial system here. Complete fraudulent financial system. We're seeing that this is now blamed on because people were eating out, right? People were eating out, so inflation has surged. If people are eating out, who gives a fuck? If you're earning $500 this week and you go and buy food and eat at home, or if you go and buy food and eat out, if you get your $500 and go buy a new car, right? That same money is being spent in the economy, right? So it's just funny. I find it funny that the news always likes to perpetrate like this is the person, this is the country that did it, this is the people that have done it, this is the segment of society that has done it, and no one's questioning A, who's the puppet master for the media, but B, like the same money would be spent on no matter what. Why are they blaming people eating out for inflation rising? Why are we seeing inflation rising all around the world? Why are we seeing property price? So if you look at the Gold Coast, they go, property price in the Gold Coast have moved up by 20% in the last 12 months. I'm looking at houses that used to sell for $400,000 and are now selling for $800,000. I'm looking at townhouses sold for $200,000 and are now selling for $400,000-$500,000. Why is this occurring, right? Why aren't they reporting the real data out there? Why are they saying the same sort of facts, whether it be in Sydney, Brisbane, New Zealand, US, UK, Canada, all around the world. Why are we seeing these same trends occur? It's because we have a fraudulent currency system. And to be honest, like, I'm really excited. Someone just said here, how good is this shit? We're about to be filthy rich. You may feel richer, but go buy something and you'll feel very poor. And that is the biggest part that we're going to be seeing, is that people used to be able to afford to buy a car, and the only reason why we've got all these new cars out on the road is because people can't afford to buy them. They're just leasing them. They've got them on loans and all that sort of stuff. So, is your money going further, or is it going less? You might feel temporary rich because you've got some extra cash, you sold something from the garage, you've got a little bit extra money coming through, but at the end of the day, you're losing your purchasing power, once again losing your freedoms, losing your ability. And the definition of a depression is having a lesser lifestyle than what you had previously. So even though you might feel richer, you're actually poorer and you've got less options, less choices, and less freedoms in your life. So with it, I've read through my articles. As I said, I think there's a lot more to share from the Ever Grenade, which is starting to blow up and explode. My personal thoughts is to keep an eye out for it, and keep an eye out for a bailout, because if they bail it out, there's going to be massive inflation. You think you've seen great inflation now, imagine when all of these loans get paid out via new currency creation. It's just money it's a bigger and bigger Ponzi scheme, and they can't stop this Ponzi scheme. If they don't bail this shit out, there's going to be time bombs going off elsewhere, and it's a big problem. A lot of people I can see are writing about my mullet, which it is a bit ugly, but as I said, I cut my hair myself and I left my little mullet growing just for the fun of it. Nathan, do you think that the property market will burst because of Evergrenade? No, I think that we'll see quite the opposite. We'll see more currency being printed. The stock market, why did the stock market go up, right? If the world has been a lockdown, we've got less things going down, we've got no one's going to the shops. Half the world for half the last year has been in their house as a prison, right? How can the stock market, which involves all of these companies, be going up in value, right? How can the Dow Jones gone from 17,000 to 34,000? Right? It doubled, right? It doubled since February last year. How did that occur? The companies either had less money coming through because everyone was trapped in their house and they couldn't be spending, or et cetera, or it's turned into a zombie company which is being pumped up based on nothing, or that there's a lot more currency creation which is flowing through these companies, which is keeping the prices artificially high. It's all coming down to currency creation. So if we look at the housing market's gone up. Does it mean your house has got any better? I actually sent a message to my mate, or my ex-business partner actually, Daniel, the other day. And we used to tell people in map sessions like 10, 12 years ago, buy 10 properties, they go up and double, sell off 5, pay out 5. It was just a very simple strategy that we had. And a lot of my investors bought 10, 15, 20 of those properties. And some people used to ridicule us and say, why would you buy a shitty old fibro house in a house commission area in Western Sydney? Those things will never go up. They're $150,000 for a reason. You're going to go bankrupt. Buy a better quality asset for somewhere for like $500,000 or $1 million. Those things, I sent them on the other day. Stuff that we're paying for $150,000 are now selling for $850,000 to $950,000. If you don't believe me, go look up places like Shalvey, Hebersham. My first property I bought was in a place called Hebersham, right? These properties that are out there, like, they're $1 million for a shitty old fibro thing. These things didn't get any better. I didn't become a better investor. You guys didn't become better investors. You guys didn't become richer because of anything else. It just became with more currency, cheap, available, readily available credit in the system that expanded the value. People have the ability to pay more. They've got the resources. But if those properties go up by 1%, 2%, 3% interest rate, the whole system will implode. And you can see the levers that are being played. They've given you mortgage holidays. They've given you, 0% interest rates. You can, defer payments, whatever the case may be, to try and delay an implosion of the market, and what they've done is created an even bigger bubble. And if this bubble starts to explode or fall apart, they've got to tape it back together. And do I think the economy is great? I think the economy is terrible, but I think that the opportunity, I think that the ability for this to be washed away via hyperinflation, we are starting to see the hyperinflation. This is what it's going to be caused by. We're seeing the triggers of the hyperinflation. We've got to navigate to avoid a collision, and as we avoid that collision, it's going to cause a bigger problem. The treatment, I said this at the start of last year, the treatment for the problem will be greater than the problem itself. We had a financial crisis which got treated with much more currency creation, and that's what's going to cause hyperinflation. And that's what I'm so excited by, because I've got lots of debt, I've got lots of assets, got lots of cash flow. These things are going to be amplified. I can do more and more things. But if I just had cash in the bank, I'd be buying less and less and whatnot. Give us a like if you like my mullet. I don't think I'm going to get many of those likes for that. Should entries self in the Mustard Festival in Muswellbrook. I don't know about that. The government will help them out again. Yes, Nick, you're right. Do I think that Western Australia will feel a lot of pain regarding iron ore? I think that this is very temporary. You can follow where the money's going, the large mining companies. Think about this, right? Has anyone ever thought that they've just devalued the iron ore to create a tax loss, right? Looking at the level of inventory, stock that these companies are holding, if the prices go down, these companies can then declare a greater loss of inventory and the value of the business and write down value. So, is it just a stock take for certain people to make the balance sheet look better? Do I feel that iron ore is going to be held down for too long? I don't. I think we're going to see massive growth in this sector. There will still need to be materials used. There will still be, as I said beforehand, it doesn't matter if investors are diddled money from one company going bankrupt. At the end of the day, there is now 1,300 projects that are either built or half built. There's still the amount of people that need to go into those properties to live. Nothing's going to change on that front. The only thing is there's going to be a lot of people that are poorer out there. There'll still be the demand for people to have a house. There'll still be a demand for people to have a car. So there'll still be a demand for iron ore. It just depends on what price. If they don't mine enough of this iron ore, it means the price will go up and it'll put an upward pressure on that market. But I don't believe it has anything to do with the level of I think it's manipulated and rigged game to keep it suppressed, just like it is for gold and silver and other sort of commodities. And I've got another comment on that as well. I was in the shower the other day. I was brushing my teeth. I love brushing my teeth in the shower. And I was listening to Mike Maloney. For those of you that don't know who Mike Maloney is, he is a commentator, goldsilver.com, and he's on YouTube. He talks about a lot of economic data out there. I share a lot of his stuff in Birchfeed, naturally. However, I don't agree. I might agree with maybe 60-70% of the stuff that he has to say. And he was talking about the Dow to housing ratio, the Dow Jones to housing ratio. He was talking about the Dow Jones to gold and silver ratio. He was talking about the Dow Jones to the silver and gold to housing value. And he said that gold and silver is very undervalued due to the fact that if you compare to how much gold or silver you needed to buy a house going back 50 years ago compared to the amount of shares that you need to buy, the Dow Jones and the housing index didn't change much. The Dow Jones, the gold and silver value towards the housing market is very skewed. The gold and silver rate compared to the stock market has gone up a lot as well. So they're saying the argument that he was making is that the gold and silver value is very suppressed. And as I was brushing my teeth, I nearly spat out. Well, I did spit it out afterwards, but I was brushing my teeth like, is this guy kidding me, right? There was something that he said, and it triggered something in my head. And what I realized and it was very, very big, right, is that, as I always say, it's not the property that went up in value, it's the money that's lost its value. It's not that the car's gone up in value, it's that your money's lost its value. What I realised whilst brushing my teeth was that the reason why the house went up in value is because cheap, easy, available credit. The reason why the stock market went up is because of cheap, easy, readily available credit. You don't see, when back in the day when you had to buy a house with a 50% deposit, you were paying 10% interest, 20% interest, whatever the case may be, people weren't out there buying property because it was so cheap. They didn't have the ability to buy it. So the gold and the silver had the same value as the house. But the only reason why these properties are worth so much more now is due to the fact that they gave you a loan at 1% or 2%, that you can put a 5% deposit down. The government gives you a grant to buy the property. They give you no, stamp duty, no legal fees, whatever the case, not no legal fees, but they pay for you to buy the property. So the government has created a Ponzi scheme around the property market to push those prices up. When it comes to things like gold and silver, the government don't give you a deposit to buy the gold and silver. You don't go and use a loan at 95% against your gold and silver. These markets have been artificially manipulated to cause these things to occur. And if the whole market imploded, right, it doesn't matter if you're still owning all of the assets. So the eventual part of this system is that you want to hold as much asset, whether it be as many pieces of gold, as many pieces of silver, as many Bitcoin, as many Ethereum, as many houses, units, townhouses, villas, whatever it takes, as many cars as you can fit into your garage as possible. The reason why I like property so much is it's easy to leverage. It has more chance of going up because they'll just make a big Ponzi scheme around the finance around it. And most importantly, it brings in a cash flow, so it can be leveraged. It's easy to go up. It's a very crucial part of this system to keep it alive. If the property market crashed, it means that people wouldn't be using their house as an ATM, and then without them using their house as an ATM, they wouldn't be able to pull out that cash they'd need to pay for a holiday, for food, or for whatever. So it's very, very crucial. If you want to keep Woolworths prices high, you keep those property prices high, right? If you want to keep property prices high and car values occurring, you need to keep cryptocurrencies up at a certain level. Because if everyone does their ass in the crypto market, well, then everyone's going to go into a little recession and the economy is going to go to a grinding halt. So looking at this situation, I think it's very, very crucial to see more and more stimulus packages coming off the back of it and the bailouts. Lisa, hey Nathan, hope you're doing well. I am doing great. Hope you are as well. Manon, hey Nathan, hope you're well. Hope you're well too, mate. And all is going well at your side. Dane, sorry. Good to see you, Noggin, mate. Thanking you. Gerks, they will get a bailout. Money printing is free for the government, so they will just throw free money and save it. If someone was to give me free money right now, and I had to pay it back in 10 years, I would go and buy whatever I could that would give me an awesome return, collect that return, and give them back their money without having to pay much for the interest. And that's the world we live in. That's why assets are very important. This is a game. People say it's a game like Monopoly. Monopoly never talks about the fact of real money. Monopoly never talks about the fact of leverage, the fact of what we do. And there's a few crucial elements left out of Monopoly. But yes, Monopoly is a little game that people play, and you can take it into your personal world. TJ, will we see a crash in the commercial property market, especially in the retail side? No, they can't let it happen. They're just pushing it up and up and up and up. Nothing's crashing. And it's not because they shouldn't. Like, technically, you should see offices fall in value. Technically, you should see properties fall in value. Technically, we should be seeing the stock market fall in value. But we're not seeing it fall in value because they just keep printing cheap, readily available credit and creating bigger Ponzi schemes. And you've got to question yourself. Like, people aren't questioning things out there. A lot of you guys are questioning because you're like, why am I being forced to stay in my house? Why am I forced not to go to work and run my business? Why am I forced not to do certain things? But you need to be questioning, why are we seeing so many stimulus packages? Why are we seeing certain things happen financially? there's signs there, and it's just because we're living in a fraudulent financial system. Mahesh Hanath, as a currency is keep losing its value, do you reckon housing boom or is going to wear off anytime soon, waiting to buy some more investment properties? Mahesh, I'm going to call you this week, firstly, because we need to catch up. Secondly, as you print, it's like this glass, right? I'm going to take a sip of water. It's got water in it. If this was to have cordial in it, and we just kept pouring more water, if you had that much cordial in the bottom, and we put that much water, it would be like 50% cordial, and it would be less diluted. We put that much in, it might have 30%, 40%, 50%, until the value of the cordial is down to 10% of the value of the cup. But then if it was poured into a big bucket and we kept pouring water into it, it would be diluted down to nothing. And that is what's happening to our currency. So the more cash that you're putting into the system, the less value it is having and the less effect. And it's going to be pushing up the value of other assets. I've thought about some things, right? Like people say, are you going to sell your Bitcoin? Are you going to sell your cryptocurrency? Are you going to sell some of your properties? And I've always thought to myself, yeah, look, you can sell off some properties. If someone had told me 20 years ago, you're buying a house and now drew it for 150 grand, and now if it went to $1 million, what would you do? I'd be happy to sell the property for $1 million, right? I'd be thinking I made $850,000, it would be great. But after the government tries to extort me like half of that, I might end up with $500,000. It doesn't really seem that exciting of a proposition. But then when I look back at the moment, if someone was to pay me $1 million or $250,000 or whatever it is, what would I do with that currency, right? If I had that sitting in my bank account, I'd just be losing my purchasing power. So yeah, I think a lot of people are now starting to realize, why would I sell my Bitcoin when it can go to $200,000? Why would I sell my house when it could be, going up from $1 million to $2 million? And that is the world that we're living in, is that the currency is losing its value. The more people that realize, people can go out there. I talked about the protests beforehand. Some of the things that I've seen are very disturbing and very distressing. Some of the things that I've seen have been people it's like, good on you. It's like, great, people have still, got their own mind and they're, taking control of their own personal life and standing up for what's right. But for me, I don't feel like I have a need to go protest. I don't feel I need to go and make a mark. Like, you can take that and look at the energy and take advantage of your own personal life, which is really, really important. So yeah, with it, I'm saying if someone to protest, don't use cash, don't accept cash, try and trade in an alternative currency. As soon as you get cash, spend it, buy something of value. Don't sell your property. If no one was to sell their property in the market, what would happen? There would be lesser and lesser stock in the market, which would then push prices even further. So if you really want to make a stand, take that stock out of the market and then don't sell it, and then you're controlling the market. And if more people were to not sell their property, it would, put more pressure in there for them to go up even higher, which would help crash this currency system that we could see. Is it the greater fool theory? There's a thing called a greater fool theory, which means that, someone will pay more, someone will keep paying more. Probably it is. But there's one big trick to play, and that is hyperinflation, and that is, crashing of the whole currency system. And we've got a decade in front of us. We're starting to see the level of inflation. We're starting to see the wheels fall off the cart, and that just keeps strapping it back together. Evergrenade will be another example of that. Whatever blows up, Evergrenade will blow up, and then something else will be attached to it that will lose its legs, and someone will lose their arm. And what I mean by that, I mean by the companies that are affiliated with it. And as those companies start to blow up, there's going to be patching and taping of those things back together. And as they get taped back together, we're going to see even greater levels of inflation. The more inflation we see, a lot of people are going to be wiped out from this, and it's what happens out there. Some people will be either too highly leveraged, or some people will be too lowly leveraged, and understanding what's coming, we're seeing it unfold. Like, I don't need to say it anymore. Like I said, lots of funny things last year. I shouted and yelled at the camera going back 3 or 4 years ago. We're seeing those things roll out in real time today. And I think it's only going to get ramped up. So am I selling properties? Yes, the property market's doubled. Yes, the property market's tripled. Yes, the property market's quadrupled. I'm not selling shit. I could easily sit there, sell off my properties and sit there and go, okay, I've got $100 million in the bank. Good on me, right? Good on me. But those assets have gone up so great just by holding them, right? Why would I want to sell them? When people ask me, oh, Birchie, you said you're going to be a billionaire by 40. How are you going to be a billionaire? I don't need to do shit, right? The currency is going to crash and I'm going to be a billionaire. Everyone's probably going to be a billionaire. But just paying note to all these things that are occurring in our world that we see today. Nathan, Birchie, you have been in Queensland too much. How's the feathers? I haven't even been in Queensland. I've been in New South Wales, but I've been on the beach. So fortunately, I survived lockdown for a long part while everyone was in Sydney, and I was frequent to a said address, which I'm currently placed at. I actually don't have a fixed address, so I can travel wherever I want to be. But unfortunately, everything else is locked down. But everything else is getting out of the lockdown. And, I've been spending a lot of time at the beach. I've got a bit of a tan. Been walking 30, 40 Ks a day some days. But yeah, I haven't been in Queensland. I'll be going to Queensland shortly. I might actually spend like 3 or 4 months up there as I roll out more expansion on the Birch Hotel Group. If it wasn't for cheap, easy credit, inconsistencies into the market, you guys wouldn't be able to buy cheap properties. You wouldn't see growth on your properties that you've got. I wouldn't see the ability to go take over 30 motels in 2021 from nowhere, like just come and take them out. So that's where the opportunity is. And for me today, what do I put my money into? I'm putting my money into whatever I can buy cheaper than replacement cost. Doesn't matter what it is, right? Doesn't matter if it's a tool. Doesn't matter if it's a window for a house, right? Whatever you can purchase today, which is cheaper than what it will be in the future, you want to get rid of that cash because it's not value to hold it. You want to be purchasing things that are going to retain their value or go up in value. So Matt here has said shrinkflation in the shops, seeing that out there. What else have we got here? Bilal, what are your thoughts about this business of physical land titles being abolished and these new rules for digital titles? Bilal, great. Thanks for bringing that up. A lot of people have been asking me and sending me messages saying, Nathan, check this out. They're scrapping physical titles as of October. I think it's October 11th. We're going to lose the ability to have a physical title. It will be stored on a digital database. And people are saying there's a lot of people out there that are making videos on YouTube saying, look, they're going to take your house off you don't own your house, etc., etc. I actually did a video on this going back in the last webinar. I talked about in the last webinar, and that should be coming out to YouTube very shortly if it hasn't already. But am I concerned? Not at all, right? If we look at Queensland, Queensland has never had, in the 13 years we've been buying in Queensland, it has never had physical titles that I could go and collect. It's always been a digital-based system. If you think that the government's going to, if you think that you can own a piece of property, a piece of real estate, go, here is, I don't have a piece of paper, here's a piece of paper that says that I own this land, right? The only way you can own land is to fight for it, have an army, and overthrow whoever the natural person is, the person that was a native person of that land. And what we've got is a system that's overthrown the people of Australia that were here 200 years ago and gone, this is our system, none of you own anything, we own everything, and you can play shares in the system and have little digits on our credit system. If you think you own your property, don't pay your council rates, don't pay your taxes, and don't pay your land tax, and you'll see that you've got, even if you own your property outright, you've got council there to extort you, local government, state government, federal government. Then you've got the crown, you've got the queen. Oh, dear majesty, oh, how dare you, how bless you, let's bow down in front of you, you criminal. That's a different story. But you've got all these layers of, people there that are trying to extort you, and you don't own your property anyway. You control that property. So many people go, oh, I want to own the property outright and buy it cash. I'm like, that's the dumbest thing you could ever do. You buy your property cash, you want to get a loan on it, and you can use that cash for something else. But if you take out that loan, you've still got another 20 people to report to on the way above that. I'm comfortable with it. I'm cool with it. Like, good luck. If you're going to lose your title of the land by, you never owned it if that's the case. So for me, I did make this video on it. It is pretty in depth around that. So yeah, keep an eye out on YouTube for that video to be released. How long before the Reserve Bank starts to lift the cash rate? Good question, Charlie. Interest rates are here to stay, right? My point of this video, is for my excitement to see that the largest property company in China has exploded, right? Evergrande, gone, right? It has debt which is worthless. You got bonds at 1%, 2%, 3%, whatever. The largest companies, the most successful companies, are fueled by cheap credit, right? The interest rates can't be risen. So they can try to change the course of direction of monetary policy at the central banks, but we haven't even changed direction of monetary policy, and we're seeing the largest companies in the world explode. So as for when the interest rates are going to go up, they haven't risen for 10 years. The last time, 11 years was the last interest rate. The last time the RBA increased interest rates was in 2010. That was 11 years ago. If we had a great economy and it wasn't fraudulent, we would have seen interest rate rises, but we haven't. We've got a Ponzi scheme, and that's why we are trapped at this thing called ZIRP, zero interest rate policy. They can't go up. We're stuck, which is great because it just means we're going to see massive inflation. Until we see hyperinflation, the way to repay this debt is to make the debt worthless. So that's the exciting part. What have we got here? We've got, hey mate, so with the China thing, would you change the investing strategy in any way, or would you still be bullish on revenue generating assets? I'm still buying properties, and I will not change my policy on buying properties for myself. So this year, I've been slack on buying residential properties. I've purchased probably about 6 or 7. Actually, no. I bought 9. I bought 6 normal bread and butter properties this year. I've bought 3 blocks of land. I saw a message from Steve over at Zenith Legal, my lawyer, that I just settled a block of land today. It's a development site. I'll talk about developments at another time, but I bought this site as a development site specifically because it adjoins a motel. But I bought 6 properties, standard properties. I bought 3 blocks of land. 2 of those blocks of land were just for shits and giggles. They were about $15,000 to $20,000 per block, just for the fun of it. The rest of them were, one is this property that I'm in at the moment. It's 2 houses on the water. One of them was a little unit in Sydney. One of them was a house on the Central Coast. One of our investors couldn't go ahead with it. He didn't go ahead. He was too slow. So I bought the property myself, and I said, I bought that property. You should have bought it. You were too slow. So there's similar sort of properties I buy for everyone, and I'm still buying them actively in 2021 myself. And I've bought about 25 motels, so like big sizable assets that I've bought this year myself, and I've bought 5 pubs. I just the other day got my first 3 poker machines, and I've got like 5 bottle shops as well that are attached to motels and pubs. So I'm still buying cash flow generating assets. I'm still buying houses. I'm still buying other forms of property. So my strategy has never really changed over the years, buying things at below market value with good, strong cash flow. So Bowie, he said, the mullet looks great. Give us a 12 so we can have a good look at it. So, it's most people are disgusted by it. Some people do like it. I was doing a podcast recording beforehand, and Carolyn from marketing, I said, what do you think of my mullet? And she's probably got one of the only people that like it. And she goes, I just think it's cool my boss has a mullet. So, it is what it is. Ali, a lot of comparisons have been made with Lehman's. The impact of an Evergrande collapse. Evergrande liabilities of $300 billion are around half of Lehman's, and the West did not have any kind of regulatory control at Beijing's disposal to defuse the situation. So China will break a few bad eggs of Evergrande and save the rest. As I said beforehand, we will still see all of the properties that they own and they build. It'll just mean that the investors are diddled their cash, someone else will pick up on that opportunity, and that's the worst case of it. But I'd love to see it implode. I'd love to see a correction. I'd love to see the market crash. But they're not going to see it. We're going to see, Evergrande, if it does blow up, we're going to see, whoever lent the money. So people will be out of pocket, and then there'll be stimulus and bailouts around there. So there's like 5 different layers to get to a person in this situation, and they're all just layers of debt that have been printed from nowhere, cheap. It's like an orgy of cheap cash out there, which has caused this situation to occur. And, the lights are coming on, and people are going to realise that there's no chair for them to sit on. They invested into a Ponzi scheme. You invested your money into Evergrande. Well, you didn't, because it's very difficult for you to invest into Evergrande, but you invested your money into a bond, into a real estate trust, into a super fund. I warned of this beforehand. I said that we would see zombie companies explode. This is a zombie company. It's a Ponzi scheme. How many more will explode from that? We will start to see. We don't know. Like, if some company was banking on their $2 billion that was deposited into Evergrande, and that doesn't get their money, or even $500 million or $250 million, that could blow up another company. And those companies that blow up could end into the tens of trillions of dollars. And it's exciting because there's lots of opportunities just within that. So, yeah. Nathan, do you think all will turn up in deflation/depression? No, we're seeing a hyperinflationary depression. So a depression because people are so poor they can't afford to buy the things because they've gone up so high. That is the interesting part about where we're at. Assets increase in value, the currency decreases in value. No cashier, no cashier. It's as soon as I get that cash, I'll try and get it out of my bank account as quick as possible. Michael Heversham, 3 mil soon. Price it whatever you want it to be. I made a video talking about Xiaomi. I actually made this video 6 months ago. People laughed my fucking head off. They said, Birch, you're an idiot. They might say I'm an idiot now with my mullet. Maybe it looks silly, but I'm going with it, right? I might actually do something with the mullet and like donate it to something if it grows long enough, and do something around that, like the course for the greatest shave for cancer or something. I'll grow it and do something with it. But I made a video saying that the properties out in Xiaomi, which are Xiaomi's like been regarded as one of the roughest areas of Sydney, and it was like the cheapest properties out there. And I said in the video that the properties used to be 200 grand. It was a video saying how 600 grand house can go to $6 million in Sydney. And I said that it's control of the currency, which would push the price up. I said that we would see, like back in the day, I was buying stuff for 150, 200, went up to 400, went up to 600. Now it's 800, 900. Like the video I talked about was the house price at 600. That was only 3 to 5 months ago that I made that video. And since making that video, the property's now gone up from 600,000 to 900,000 in that location. So, to say it will be going to the millions sometime shortly, it's not too far-fetched. What we haven't looked at is that all the people that did own a property beforehand, so if someone owned 5 properties or 10 properties, they bought them for 2 million or 3 million, and now they're worth 5, 8 or 10. Those people are sitting on a shitload of money. If these people go and redeploy those funds, they could go and push the prices up of the rest of the market even further and make it more difficult for people trying to get into the market, which, that is the amplifying factor of this, and this is what will happen. This is what has happened before today, and this will only amplify as we go on into the future. So that's why I'm so excited. When I see it, so I've acknowledged all the risk, right? And it's like, I've minimised it. Some people starting out getting the first property might be a bit tougher. Is there still opportunities to be made? Massive opportunity to be made. Chris said, everything we have said is happening. Finally, the sky will fall, so we're going to pick up the pieces. Maybe I'll stick around to Raven Village. Look, it's very exciting. I'd love to see the markets crash, but all we're seeing is inflation. And yeah. It's funny how mainstream media have only just started talking about inflation. 6 months ago, it was a conspiracy. Exactly, Denise. 2 years ago, inflation, people were like, what's inflation? Talked about hyperinflation, off my head apparently. That's why nowadays on these videos, I'm just like, it's happening. It's just happening. I've got my popcorn out, I'm watching. There's still opportunity out there, still massive opportunity. If there was an opportunity, I wouldn't have bought 9 residential properties this year, and I wouldn't have bought 30 commercial properties in a depression. So, there's so much opportunity. Steve said, I've ordered a wood-fire hot water heater. It's already going up in price, and Acorn Metal Products haven't finished making it yet. I did see your message the other day, Steve. I saw it somewhere. I don't know which platform I saw it on. I did briefly see that about the wood-fire heaters. Everything's going up. Doesn't matter if it's a hot water system, doesn't matter if it's a kitchen, doesn't matter if it's an oven, doesn't matter if it's a toilet system. I was at Bunnings. I'm just looking up the lights here because I've got this place. I got it all painted. It was all done, and I haven't fixed the lights on here. And I went down to Bunnings, and I was like, shit, they've painted around the lights. I was going to change the batten fittings for these. I didn't want to have to pull it all out and wire it up myself or anything like that. So I just went down to Bunnings, and they had the balls, which are like $10. They've always been $10, but there used to be a whole range of light fittings that were up to like $30, $40 and whatnot. Now there's like 2 or 3 light fittings that you can have as a batten fitting, which is just the bulb that goes over the normal fitting, up until about $50, and then everything's $50. The prices of everything doesn't matter. If that's the price of a light fitting, what about the price of the timber in the wall? What about the bricks that to be laid? What we haven't looked at is the tradies, right? This place here, I used to pay tradies like $200 a day. They'd come in and go, yeah, we'll paint the place, we'll do this, we'll knock out some walls, whatever. Try finding a tradie that's going to work for less than $500 a day, right? They want $500 a day, and it has to be cash, right? And to like paint some walls and stuff like that. What about the bricks getting laid? What about the framing of building a new property? Whatever you're buying, if you're buying it below, rebuilding of it, whether it be a car, a house, or anything, that's the key of investing today. I've always talked about below market value, upside for capital growth, and a strong cash flow. Those 3 things I've always talked about. The 4th one, which would occur on about 60%, 70% of cases now when I buy something, I want to get it below remaking it, the cost of remaking it. And that's going to be a very interesting market there. I've seen, randomly, I saw something the other day on Instagram, on Facebook or something, and it said built, not bought. It's some car promo or something where they're building their dream car instead of buying their dream car. I've seen these cars they might pick up an old shitty Land Cruiser or something like that, and people are calling it the Corona tax and all these different sort of things, but they're redoing an old car and they're selling it for like $200,000 for an old Land Cruiser, and it's like there's more money in doing that, just because inflation. There's opportunity in a niche market. There's opportunities out there, whether it's whatever it is that you're doing, just look for it. A couple of these properties you got me already are up 50 to 60K each. Can't wait to go again. I'm so happy. When I read that, I'm just like, I laugh internally. I'm like, that's great. I'm so happy that I've got you them. And let's look at what we can do for your next part of your property portfolio, because there's so much opportunity out there. So let's have a chat. What do we got? It's called inflation. Yes, it is. Can still get bulk paper at the moment. Yeah, I don't know. I don't look. What would you consider over-leveraged? Over-leveraged would be buying shit that's at the peak of the market. So over-leveraged would be someone paying $1 million for a property that rents for 500 grand because they think it's great buying. That $1 million property that used to be 500 grand or rent for $500 a week, you're buying at a peak of a market, and there's so much, downfall, and you leverage all the way up. You want to be buying stuff that's, of significant value. If you're buying a property for $100,000, you can't build that property. I've been speaking to people and they're like, I'm building a granny flat for $150,000, $180,000 for a granny flat. I'm like, I would never build a granny flat for $180,000. I couldn't even justify it on $100,000. I'd rather spend $100,000 and go buy myself a 2-bedroom townhouse or a 2-bedroom unit or a little house somewhere, because that the market can't go lower than that because it's below the cost of rebuilding already. The upside potential, it'll get sucked up with inflation. If anyone wants to build around that location, they're going to have to pay a lot more to build that thing. So there's a lot of people out there. I see them in the market now. They're like, I just bought a brand new house and land package for $1.1 million. Is it good buy? I'm like, you just screwed yourself up. There's a lot of people out there that are, paying and leveraging themselves way high for assets that have been way inflated. You want to be getting at uninflated assets is what you want to be buying. And if you look at over-leveraged, people that are out there buying a house that it's going up in value and they're taking their equity out and they're buying themselves a car and their wife a boob job and, all those sorts of things. Yes, Nathan just said that because it sounded funny. But, people are using their house as an ATM. Be wise with what you're doing. You want to make sure that your cash flow is strong. I see people out there, and where I live in Sydney is about a 30-minute drive from my office, right? So I reside in a dwelling, which is about 30 minutes away, and it's on sort of like 10 acres, it is 10 acres. It's 2 5-acre properties on one. And I drive to my office and drive past all these houses that are on 250 square metre blocks of land. And I often think about it and I go, who lives in these houses? And I'm driving to my office and I'm seeing all these people. They've got a nice car that's on a loan. They've got their house that doesn't have eaves. They've got a nice facade. And wealth to those people means that I've got the biggest facade. I've got an extra column in the front of my house. I've got a bigger garage width out the front. I've got a rendered house, whatever the case may be. And I think to myself, and I think you've got a husband, a wife, and maybe 2 kids. Let's just say we've got this little storytell family of mum, dad, and 2 kids. Back in the 90s, you'd have the dad working, the mum at home looking after the kids. In 2021, you've got the mum and dad that have the kids. Within 13 weeks, the wife has to go back to work to pay for the mortgage, and they're trapped for the mortgage. They're a debt slave to the mortgage, and the kids have to go off to daycare, and the government pays a little rebate to cover the kids to go to daycare so the 2 of the parents can go to work and earn money to pay for the house. But I often think about it, I think, if you're paying $1.2 million for a house to live in, you're on the hook for paying that mortgage, right? And the same token, you could buy 6 $200,000 properties that rent for $300 a week. So let's just say you bought one property for 200 grand, that rents for $300 a week. If you, instead of bought 1.2 for one property with no eaves, it's trapped in the mortgage, and you're on 150 grand household income, husband and wife earning 70, 80 grand a year each, whatever the case may be, you could buy 6 properties for 200 grand a piece that rent for $300 a week. You've got 6 rental incomes of $300 a week. That's 6 times 300 is $1,800 a week. That's about $92,000 a year worth of income. So in option A, you've got one big mortgage with one little block of land, and you're strapped to it, you're tied to it, and if you don't go to work and perform your tasks, you don't really have your life, and you have to get moved out. But if you had those 6 properties that rent for $300 a week, you've now got an extra 80 grand a year income. So you and your spouse can work and earn 150 grand, but then you've got an extra income, which is almost half of that, to pay that same level of mortgage. So option A, you've got 150 grand income with a $1.2 million house, you feel good in it, you've got sleep at night factor because you own the roof over your head, which if you don't go to work, you lose that roof over your head. So is it really a job security, or are you buying yourself a trap yourself? Or you've got the same level of debt, you've got 6 properties that are returning you an income which is the same as what one of those incomes would be. suddenly you've got greater cash flow, you've got same asset, you've got 6 hooks in the ocean to catch 6 fish instead of 1, whether it be equity. You've got 6 chances of getting equity. You've got 6 lots of tenants. You've got 6 ability for tenants to go up and rent. You've got at that level of 200 grand instead of $1.2 million, is the downside risk is removed because it can't really go any lower. But this could come all the way back down. But the value of the asset that you've got, it would cost you more than $200,000 to build a house, a townhouse, a unit, or a villa. So, just being cautious with your strategy and what you're doing. What have we got here? Such a thing. What have we got here? 10% deposits. What have we got? Do you know if they're still changing the way you pay stamp duty, and if this will affect, what effect will this have on prices? So New South Wales government came out last year and said that that they will be changing stamp duty laws this year, or they'll be trialling it. I haven't heard anything about it recently. If they do change that, that means that the entry to ownership of that house has become even easier. So if someone wanted to go buy their $1.2 million house, they'll have to pay, 30 grand in stamp duty. That's 30 grand they have to save up as cash out of their own pocket. Yet if they were to make that an annual payment of, say, $5 grand a year in, year out, or $3 grand a year worth of tax, that's a bite-sized piece. So someone that's looking at paying $1.2 million for this property, have got a deposit for it, it means they can get in easier. So you've got more people coming to the market to buy the same asset. It'll just push the prices up even further, and it's just a bigger sort of fueled, manipulated market. So on that front, when they do that, we'll see even more pressure on the property market. I haven't heard anything about it. They're talking too much about people having medical procedures to get out of their house rather than other sort of things in the news. So I'm intrigued to see when it comes out, if it does come out. The government did say that they would be changing and relaxing lending policies, but they never did that. So it'll be interesting to see. But when they do it, that's another trick up their sleeve that they have in order to push the market up even further and to manipulate the parameters of this property market. Janine said, my understanding is that you will not lose your home because it is on digital title. It is more the fact that no one currently owns their homes because none of our mortgages are signed by the bank, and what they do is bundle our homes together into the bonds and trusts and sell them off in the stock exchange. That's where the liquidity comes to the bank anyway. So when you are buying let's say for instance the bank needs liquidity, they will go and wrap up bonds and create financial products to trade on the stock exchange. It's not necessarily like ABC Proprietary Limited on the stock exchange. It's more like the derivatives and the bonds, and that's what caused the GFC back in 2000 and 2008. And we're starting to see that market, and they've got to create this cheap, easy, available credit from somewhere, and someone's got to take that bomb, and that's what we're starting to see unfold with our Evergrenade in China. And it'll be interesting to witness what happens there, because if it does explode, and people come looking for their capital, who owns it? That's a good question. I'm not too concerned about it, Janine. People will go to say that the Australia is a company on the New York Stock Exchange. If you go and look up Australia Proprietary Limited, it is a company that trades on the stock exchange. However, they use that to create bonds and derivatives and what other things around it in order for us to operate in. So the whole system is a Ponzi scheme. The only way that people really own land is via aggressive, takeovers of land, and it's always been fought with knives and guns and explosives and stuff like that, which is been fun. We've read it through whatever we're led to believe of history. However, we're all just working in the matrix. It is the matrix. It is just a game. People think that they take it very seriously, right? And it's like everyone's caught up in that matrix and the trap. So the digital title isn't a big concern to me personally. Erkan said, if the intention is to reset and rebuild, increasing the interest rate would be part of the agenda. It would be, but if they increase the interest rate, then all of the other assets that they hold will implode. So if interest rates went up, then consumerism would be exploded inside of it, and certain other things would happen. So I believe that we will see interest rates rise, but they won't happen until we've seen hyperinflation chew up our economy. What have we got here? BWS, Birch Wine and Spirits. It's actually something a little bit like that. I'll talk about it a little bit later in some other media. Justin, I'm sure you've already answered this tonight, but I got in late. What are rates going to do? Do you still see them going negative? Seem to be hearing a lot about them rising. They will never rise. If interest rates do rise, they may rise by 1/4% or 2/4%. If the market went up by 1%, like we've got companies going bust here, which are the largest companies in the world, that have got almost 0% interest rate. So there's no scope to change monetary policy at the moment. So it's great. Orgy of cheap cash, or just sounded like what it is, like a drug and drinking orgy of the central bankers just making cheap available credit. I said cash, but it's actually really just credit to keep the system alive. If there is a hyperinflation, would you be worried about tenants not making rental payments? Yes, if there was a hyperinflation, there would be issues with tenants making rental payments, but then probably also be stimulus checks coming out far and wide that would go to tenants. There's actually this thing in New South Wales, if you reduce your rent for your residential tenants, you can actually get a grant for $4,500. So the government is paying owners of properties to get rent relief for giving discounts to their tenants. So I'm currently pulling that apart into its finest parts to see if you really, what the parameters of it really means. But it is a concern if there was a hyperinflation that tenants may not be able to afford to pay, because they wouldn't be able to afford to pay for food or any other sort of living expenses, which is really the world we're stuck in at the moment. So I think as we enter into the digital world, I've talked about it on the webinar from August. So reach out to my team, admin at binvested.com.au, ask for a copy of the webinar, which I talked about the digital world. I think that one of the next layers of them giving out stimulus packages, like now you can just apply for grants and stimulus packages, and there's lots and lots of money out there for everyone to go get, which is basically free money from the government. I think that they'll start saying if you want to get more and more of this money, you're going to have to be entered in the system for having a procedure, a medical procedure, to happen to be able to get that. So it's interesting. Nathan, Shelby Place I sold around the corner from yours is 200k higher than previously peak of 2017. It is crazy. It is crazy, mate. Bevan said, my builder mate is refusing to quote new home builds from Christmas onwards. They can't price anything. Exactly. The cost of timber's gone up. The cost of copper piping, copper wiring, everything's gone up in value so high that it's unaffordable for builders. There's builders going bankrupt in the biggest boom of all time. It's crazy. I could chop, no cash. Thanks for sharing great property insights. Thanks for that, Marcelo. Marcelo, we need to chat. I've got a round two of what we did last time with that property, the last property you got. So I've got another one there. Hamish, so crypto in speculation then. I think that the whole crypto market is built up once again of a lot of cheap available credit. However, do I see value in crypto? I'm very heavily invested in the crypto market. Someone asked me the other day, what do I think of the share market? Should I sell off my shares? And I said to them, I'm not a fan of shares. I hate them. I don't have any paper assets at this point in time. Doesn't mean I won't buy them. I just think that it's a big bubble. But I said, if you sell your shares and just put your money into cash, that will be worse, because your cash is going to lose more value than your shares. So, when it comes to crypto, I'm a big fan of it, but I know that it's heavily manipulated at the same time. So don't be fooled buying into all these, we're going to the moon, we're going to get, Bitcoin's going to go to $1 million, and, we're going to see it. The central banks, they haven't figured it out yet. The central banks have not figured out that Bitcoin is the answer to the future. The central banks control the game. Why would they want Bitcoin for? So, if you think you're going to see us trading in Bitcoin, it's not going to happen, right? We can trade in it, and I encourage everybody to trade in it, but it's not like the central banks are going to, let everybody trade in it and make it their currency. So, TJ said, was that a grant or a discount on land tax for landlords who give rent relief for commercial properties? I believe that if you are in New South Wales, you give a discount on your investment property. If you're a landlord that cuts the rent, you get $3,000 per month rent relief. So if you are a tenant in a commercial property, ask your landlord to give you a discount, and then go and claim the grant that the vendor or the landlord gets for $3,000. So the grant goes directly to the landlord of the property, and you get the discount. So you speak to your landlord, do a bit of digging around in regards to that grant, which is from the New South Wales government. Hey mate, what are your thoughts on commercial property in the northwest of Sydney? There is very few commercial properties around in northwest of Sydney. I own a couple of them out there. Do I think they're going to crash? There's actually a shortage. There's a boom going on in commercial property. So go figure. Justin just asked, what has caused today's bloodbath in the stock market and the crypto market? What has caused the bloodbath in today's stock market and crypto market is Evergrande. Evergrande, I'm using it as a bit of a play on words, Evergrande or whatever you call it. Evergrande is the largest company, the largest property company, the second largest property company in China. It has found out that it is a Ponzi scheme. It is going under, and it's going to probably end up like a Bear Stearns Lehman Brothers. The market's got a lot of uncertainty because a lot of other companies out there, there's no clarity as to how many companies and the extent of the derivatives. Literally, there could be $10 trillion worth of derivatives backed on the back of this explosion. So if we go back to the US property market back in 2008, just to give size and context of it, yes, Evergrande is probably half the size of Lehman Brothers debt that was there, but the GFC with Lehman Brothers triggered off a $7.5 trillion property Ponzi system derivative bubble market implosion. So the market crashed of $7.5 trillion worth of assets that were taped together via derivatives. So if people are just sitting there thinking we've got $300 billion worth of debt, it's all the derivatives and off-balance sheet transactions, Ponzi scheme, bullshit, deals that have been done within side of different companies, different trusts and different funds, should we call them. We don't know the extent of how big this derivatives bubble could be that's connected to the back of it. Could be 5 trillion, could be 10 trillion, could be 20 trillion. It could be 10 trillion here, 20 trillion there. It could set off, fireworks, those little Chinese fireworks. It could be like that with this one thing going up in smoke. So it's going to be very fun and exciting to see. I'm glad I have no exposure to the stock market at this point in time, because I believe the next 48 hours up to the next sort of 2 weeks, we'll see many volatility. So if you're sitting in crypto, I'm not here to give you financial advice for anybody, but just, anything can happen out there, right? But keep an eye out. There's going to be fun watching it because there's going to be a hell of a lot of volatility. If you trade in those markets, volatility is great because then you can make money on the swings and ups and whatnot. So on that note, it looks like I've gone through all of your questions. I just want to thank everyone for tuning in. It has been a while since I've done a Facebook Live. Just sort of check in, say hi, and give 2 cents on what I'm seeing happening out there in the marketplace. If you do need help, you can contact us at admin@binvested.com.au. Give us a buzz, 1300 367 925. And most importantly, I post a lot of shit on a daily basis. I'm not so active on here. Like, as I said, I've just, I've bought 30 motels and pubs this year. I'm building different companies. I've got hundreds of staff. I've got lots of things that I'm committed to. So my timing is a little bit stretched to come on here with videos. I do try to share daily content. over at Birchfeed. You can get free access to Birchfeed. It's birchfeed.com. It costs you nothing, so you don't even need to be a tight ass. I post some very out there stuff sometimes, stuff that may seem controversial. Sometimes it may not make any sense on the day that I posted. But if you do research it, do take an understanding of how it works, do ask questions around it, you will generally see, the picture form over the course of 12 months, 24 months into the future. So we're starting to see some really, really great things happen out there with great opportunities. There's been great results. It's been great to see there from Bevan saying, his property's gone up 50, 60K. Everything is going up in value. Lots and lots of results, lots of gratitude there with my investors that have been able to help out over the course of the last 12 years or so. But everyone's wanted my help to go, hey, what do we do next? And, I've been very, very busy on that front. So on that note, guys, we'll catch up shortly. And if you have any questions or topics that you want to see in future Facebook Lives, flick us a message in the comment section below and I will get them out to you. So in the meanwhile, keep being awesome. Be careful of what the media is telling you. Don't get caught up into the scam. The media is a propaganda outlet. Question everything. If it doesn't make sense, doesn't feel right, don't take action along it because, your personal liberty and freedom is most important. So keep being awesome. Catch up soon, guys. Bye for now.